Well, we're going to kick this one off. We'll do it same as usual. I'll start off just taking a look at the market action, the crazy, choppy market action. Got a decent amount of headlines here, some of the top stocks in play, and the usual. So, in what we're looking at going into this week, because we do have a shortened week of trading. So it's gonna be interesting. It's also the third week of the month, so options expiration along throughout the week. You'll probably get a little bit of rebalancing and some stuff happening as well. So it could be an interesting week. So starting off with the SPY, we spent, I think, I'm not gonna beat a dead horse here because we talk about it every day. But the last 3 days, market just kind of chopped around here around the 200-day, kind of in between these two levels for me. It was really the 200-day SMA that I was watching, and then kind of this 440, 450, 445ish in the SPY. It's not really an exact science here. Looking at this inflection point in the SPY, and we really just kind of chopped around. Volume was okay. It started out, we started the week with abysmally low volume. In fact, I think Monday was, probably the lowest volume day we had all year. And then we kind of started picking our way up as we went into the FOMC minutes on Wednesday. And if I, whoops, that's the wrong chart. If I zoom out here, do a little, just maybe do like an hourly here. I mean, this is all just kind of chopped. This is just sideways accumulation, capitulation, whatever you want to call it. Whether this is setting us up for a lower move, we're gonna have to wait and see, obviously, because price action is going to be the only thing that matters here, and we are still holding at the moment until we start, breaking some of these lows. I don't want to assume. Now we are putting in lower highs. We are kind of starting to slant our way down as best we can. You can see it a little better on the Qs, obviously, because Qs were the weaker of the bunch. They actually finished at the lows here. So this has definitely been a week where watching multiple markets has given you a little bit of a fuller picture here. Tech, holding as best it can at the 50, but we closed, with a bit of an MOC sell imbalance on Friday, which caused us to close at the lows. Pardon me. And then I saw, speaking of the MOC, we talk about watching, the money, the big money, watching the MOC orders, seeing if you can get a gauge of what big money's doing. Morgan Stanley came out from their desk and said that 8 out of the last 9 trading days, they saw a lot of net selling in terms of larger institutional flow. So 8 out of the last 9 days, if that's going to be the smart money, the big money, selling and positioning themselves out, to retail, to whoever will take it, that's something that we need to take note of. And alongside that, they also said they saw a whole bunch of defensive posturing. Now, anyone who looked at the market could see that. You just pull up utilities and you pull up consumer staples, and you see what looks to be momo stocks now at this point suddenly. People defensively positioning themselves into we're seeing sector rotation here, further sector rotation. This right here is sector rotation. Retail can't do this. Retail can't do this that we're seeing in utilities. Look at utilities from the almost the end of February here. XLU's gone from 64 to 76. We're up to 20% on utilities. These guys usually grind. There's obviously a lot of factors attributing to this, with the energy price increases and so on, but this is defensive positioning. So a lot of people obviously still talk about, bond market is dropping. Market was holding its best. Bond market, no, not even close. The bond market's still pricing in pain, pricing in recession, and stock market's doing its thing, fighting as best it can, tooth and nail. I think it's more a question of when we drop, not if. We'll have to see. Now, Friday, we did see 20% of the notional gamma out there in the SPX expire. Maybe that gives us a little bit of wiggle room out here to be able to start moving away a little bit. You get a little bit of that underlying options pinning kind of loosened up. We'll obviously see more expire this week. But, we got through the FOMC minutes. We filled this gap, which I didn't like. And so now I think we're a little free to move on. Now, today we do have France's elections. I have not seen any updated polling numbers. I don't even know what's going on over there. For those who don't know, we've got there's multiple candidates. At the end of today, if no candidate won over 50% of the vote, then they're going to take the top 2 candidates and redo the vote in 2 weeks. So we'll see if we get results there. But we saw French bond yields, explode, and their French debt dropped off on the reports that Le Pen, the challenger, a little much more right wing, is actually gaining ground there. So that's going to be something that could definitely affect European markets, which would then at least influence our markets. So we need to keep that in mind. Definitely keep an eye on on who ends up, what ends up happening today if we have a decision or not. Then we have 2 minutes off. We had the FOMC minutes. I'm not gonna dive into those yet again, but we've now set the stage in terms of expectations. Likely 50 basis point rate hike. We'll likely see something about starting balance sheet reduction next meeting, but we still have 4.5 weeks until the Fed meeting. So now it's just listen for if any Fed governors talk, but in the meantime, that's just far enough out that I don't think the market's going to be just selling off in the meantime, just because of that. Now we are still below the 200-day in the SPY, so there's no reason, in my opinion, to be buying in here. There's no reason to be selling until we start reapproaching this, the lows here this week. We'll see where we open at, but that's something we're gonna have to wait and see. Fed, obviously, we're going to be talking about them plenty in the coming weeks here. I think it'll be relatively quiet with the Fed. We'll see this week. In terms of, Bullard already came out. He got to talk about his wanting 300 basis point rate hikes. Goldman came out. They talked about their basis point rate hikes they want. Everyone already got to get that out of the way. So I'm hoping we get a little bit of quiet period here where we can focus on the other things. We do have economics this week. And in fact, we have some important economics this week. More importantly, Tuesday, we have CPI. So the reason I'm interested about CPI is because we're starting to see even a more aggressive pass through in cost increases to the consumer. Lately, through the last couple of months, as CPI and PPI have been rising, we've talked about this widening spread between CPI and PPI, and what that means is that PPI has been going up a lot more, and that the producers are incurring a lot of costs, and they're not necessarily just directly passing that on through to the consumer in the CPI. Now, they can only do that for so long, obviously, before their margins start getting hit to the point where they need to pass through. And there were companies that were just directly passing through their costs, like Tyson and companies like that just started upping their prices. But the ISM Services Index last week saw the most amount of selling to the consumer price increases ever recorded for at least that index. And that index doesn't go back like decades. It goes back maybe early 2000s, but still the highest amount of price increases onto the consumer ever on this last services index. So we'll see if that starts showing even hotter inflation on CPI. Now, again, we're going to have to see what the market thinks, because what the story's been so far with CPI is we expect something crazy. We get something a little crazy, still crazy, but not quite as crazy as we thought. And so the market doesn't freak out because, the stock markets are irrational sometimes. So we're going to have to see what the market's reaction is, but that's going to be on Tuesday, as well as the 10-year note auction. We actually have the 10-year note and the 30-year note auction this week. Definitely want to watch that, because obviously rates, we've looked at rates every day. This is just, this is what rates are doing. This is, it's astronomical. We're seeing rates continue to go up and up and up. Yield curve inversion, we talked about that when that happened. But rates are getting pretty hot here. In fact, the TYX, the 30-year, is reaching the levels that we talked about, that Mal pointed out, that go back this resistance level. I can actually go back even further than 20 years here. You can see this resistance level since 97. Just going straight down. In fact, I think it even goes earlier, but Thinkorswim doesn't have that because it's Thinkorswim. But this is important. This is relevant to watch. TNX is actually breaking theirs. So rates are getting really hot here. This is a very substantial monthly bar here on rates, and we're really starting to see us pick up here. And typically, we don't see ourselves string more than two substantial rate hike bars at a time, maybe one during some hawkish periods in the Fed. So if rates are going to continue to elevate this week, that's going to put further pressure down on equities. The faster these things rise, especially tech, obviously, which is why tech was so weak last week. But we definitely need to continue to watch rates as well. Now, what I'm thinking could happen, whether this starts this week or next week, this is, I've talked about this. This is what we see a lot of times kind of going into that quiet period before the Fed. The rates just kind of tend to calm down, drift off. Now, with all the headlines we're getting and things like that, that's going to be, if we can get a period without any kind of hawkish headlines for once, where the analysts and the Fed governors can shut up, then I think that we could see that. And that's, we're just gonna have to wait and see. It's going to be headline dependent, in my opinion. But that's going to be something we're going to have to watch. Obviously, last week we talked about it. Consumer credit numbers literally doubled expectations. Americans are swiping. That's probably partially, a large portion due to inflation, which isn't going away anytime soon. But also, stimulus is probably dried up at this point. Savings levels are lower than pre-COVID. So we're gonna have to see if that starts to cause any shakiness in the short term. Now, in terms of Russia headlines that we got over the weekend, we actually got a couple. We didn't get anything too substantial with Finland, Sweden. We there were headlines that the NATO applications were imminent. Obviously, that would be further escalation. We'll see some things. But at the exact moment that Zelensky was actually addressing the Finland parliament, they just so happened to be experiencing some cyber attacks. So, well, I'm not, we'll see. But that's something that we have to listen for. If that happens, there will be escalation. There will be further stuff. Maybe Russia does outright export bans. Who knows? But that's something that we have to monitor. Russia obviously being a lot more accommodative in their economy right now. They slashed their rates by 300 basis points. They're allowing foreign investors to convert currencies at their banks again. So you are seeing some stuff over there. Whether that's anything to note or not, we're just gonna have to continue to watch. Boris Johnson did do a little surprise visit to the Ukraine. I don't think that Russia's given any response yet. So that's, it's again, poking the bear. We'll see if the bear pokes back. Supply chain's already screwed enough as it is. There's a lot of talk about the fertilizer export caps and bans that are going to cause food issues in the future and hunger, famine and hunger crises in a lot of countries. We'll see if we see any escalation there. It's just another thing to watch. We are getting more sanctions from the U.S. So Biden downgraded Russia's trade status, which allows further sanctions. And then also we saw the U.S. Treasury sanction Russia's one of Russia's largest diamond miners. That's actually responsible for a third of the world's supply of diamonds. So maybe we see further escalation in some of the miners. Maybe we'll see what Signet Jewelers does or something like that, or Rio. I think they're a diamond miner. So maybe watch some of this sector because they're hot right now. But this isn't that strong of a chart yet when you compare to some of the other commodities. So that's most of that headline. Obviously, the China stuff is just all screwed up as well. Their zero COVID policy is going to continue to put a crunch on things. They've now had 7 or 8 straight days of just worsening COVID numbers despite being locked down. There's some really screwed up videos obviously coming out from over there of stuff that they're doing to people in Shanghai. So it's going to be interesting to continue to watch that. They're definitely not in a strong position right now. So whether they're even going to be able to do anything with Taiwan in the short term is a question because they've got a lot of domestic issues right now. We haven't heard from Evergrande in that group in a while. I think it's probably just cyclically and time-wise. I feel like it's about time that we start hearing about that again because why not? Things are quieting down anyway. We might as well throw that back in the mix. So listen for that stuff as well. The last headline I wanted to mention was, and this is more housing market based. We kind of give we've been talking about this loosely on the side because, with the 30-year mortgage rates rising to levels that we haven't seen in years, as well as housing prices continuing to increase due to a lack of supply, Realtor.com actually gave a couple turning numbers that maybe we're starting to see that kind of temporary cap in the housing market because affordability for housing is getting to serious levels here. But Realtor.com said new listings rose 8% from a year ago. Now that's following 4 consecutive weeks of annual declines, even longer if you give a little wiggle room in there. So we actually saw listings increase, and we had a 12% of home sales had a price drop. So it's too early to say this is the top of the housing market. But affordability is definitely, still going to be an issue for the housing market, and that's our first sign that we've had in, since this war began, I think, and not that the war is relevant to housing, but well, to an extent. But that maybe we're starting to see a little slowdown in the housing market. We'll see. Supply is going to be the biggest issue there. Anyway, that's most of the headlines. Other stuff this week, we do have PPI on Wednesday. Friday, the market's closed, so they're going to cram all the economics from Thursday and Friday into Thursday. So you have jobless claims, retail sales, import, export, business inventories, consumer sentiment, so on and so on. Retail sales will be interesting. I think retail, I'm not going to expect a really terrible retail sales number just because of the consumer credit numbers, if you think about it. If people swipe their credit cards double like we thought, I assume they were buying shit, so I'm gonna give that's gonna be it's a weird guess from me on a correlation, but we'll see. I'm kind of curious to see if those things are gonna correlate like that. But those are gonna be our our numbers. And then the last thing I want to mention is that earnings is starting to pick back up, and boy, this is gonna be fun. This is gonna be an interesting earnings season, obviously. Energy prices being what they are, and a lot of the pinch that some of these companies might start feeling. Now, a lot of this has kind of happened at the end of this last quarter, so maybe we might need to look more in guidance. Who knows? Buybacks are still a heavy thing out there, so EPS is definitely still being very heavily kind of influenced and manipulated on these corporate earnings because they're buying back their stock still at record paces, and that's decreasing the amount of shares, which will artificially raise EPS. So top line beats might still be around. We'll see. But we're going to kick it off this week with a lot of the banks, Goldman Sachs, Morgan Stanley, yada, yada, yada. We also start with some airlines, Delta Airlines and so on. And the airlines are going to be interesting. I talked about Mike's issues with his cancellations, with flights, and obviously energy prices for airlines are going to be interesting. So the airlines have not even shown a flicker of life in the market yet. So that is your hour-long summation of the several different headlines and sectors and things that we need to be juggling right now. And this is probably why the market's so just kind of choppy right now and listless. And there's a lot of people who show up in the chat and say, it's been choppy and difficult to gauge the market right now and get ahead on the market. That's why, above all, price action's all mostly what we need to watch, because sifting through all the BS, let the market do that for you to an extent. So definitely going to be watching to see if we break these lows this week. If we do, you do still have the 50-day here on the SPY, could provide a little bit of support. I don't think it'll be too much support, because if you go to the Qs, once we start breaking, we got a little open air below us. So we got some space below us on the Qs. IWM obviously is dog shit. That one finished at the lows. It's below the 200-day. It's below all its moving averages. I don't see any love in life in small caps, especially with the recession talk and the inflation talk and everything like that. There's no reason to think that the small caps are going to be able to turn around anytime soon. So that's the IWM, obviously. The SPY is really the only thing that has the closest near-term support at the 50-day. And then even then, you've got some room until we get to some further support here. I'd be looking next at those maybe January lows here. So that's kind of your bearish levels. If we manage to get over the 200-day, who knows? Market is rife with FOMO. And if you think about it, to be devil's advocate here, if we saw 8 of the last 9 days of net selling, if this market doesn't drop and some reason it squeezes higher, those corporations might want their money back. They might want their stuff back, and they may squeeze it higher. It could be a FOMO chase. I don't expect that, but it is something that we got to be careful of. This is nothing but short squeeze. This is all of this was a bear market rally. So I'm not saying, after seeing this, you shouldn't be like, oh, that's it, market's going back to highs. This is nothing but a bear market rally. So we'll see where we go from here. If you put a gun to my head, I think it's lower, but that's that. Looking at commodities, and I'll talk some of the stocks and play quickly. Obviously, oil. We watch this every damn day. It's kind of still got these descending highs here. It's pulled down to this support, but it is holding. It's going to be very headline beholden going forward. OPEC hasn't budged really on anything. Iran nuke deal seems dead in the water. Nothing from Venezuela. So obviously, in my opinion, still bullish in the long term. But we're getting that short-term kind of price action on the downside. So we'll see what ends up happening here. Gold starting to pick back up. Started to wake up here. So maybe we talked about the safety trades picking up in the market, like utilities and consumer staples. I would expect gold to pick up. So I'm still fully bullish gold, especially since it's kind of holding here. I'm definitely going to watch miners and watch gold plays this week as well. Dollar I can pull up briefly, but it's still kind of just breaking out, kind of ascending, doing its thing. It poked through 100 recently. It's the dollar. I'm not really going to watch it and do too much analysis on that one. And then crypto, the biggest disappointment of them all. I mean, it's not that surprising. Crypto is still seen as a risk-on asset, and if you're seeing safety trades being put on, risk on isn't going to be doing anything. So still seems also like it's a little kind of beholden to what the market does. Now, Ethereum is holding up better. So I would definitely still watch Ethereum. It filled this gap and then it's just kind of stopped, whereas Bitcoin's still selling off. So if we are going to see a turnaround, I'd watch Ethereum first. But again, with what the market's doing and seeing these safety trades be put on, I'm not super stoked about it. But we'll see. We'll see. And then last but not least, our friend volatility. This you just Mo and other people in the chat keep asking about wanting to put on volatility plays, and I get it. I get the desire and the want to catch when we pop off of these lows, but right now, kind of like how Bitcoin's not the play, volatility's just not the play right now. It's just nasty. I mean, this is just it can't get up. It can't move. And if you pull up like VXN, I talked about the Qs. Qs finished here near the lows. Where the hell's the VXN? What the hell's it doing? Like this is nothing. It's dead. And Russell volatility is compressed. Meanwhile, IWM actually finished at new lows, I believe, on Friday. But to be fair, the Russell, like I said, is shit. I'm public with that opinion, and its volatility has even hardly spiked ever. So, but again, volatility is just not picking up, which tells me that put buying. Remember, volatility. This is based on the options, and just means maybe that we're not seeing that aggressive put buying quite yet. We're seeing more defensive posturing, but not a lot of people kind of buying those short dated puts. So we'll see if that picks up this week. Who knows? Some of the stuff, I'm just going to rip through some of these stocks because, it's funny because I have my list in front of me and I kept my list from last Sunday's video. And I looked at the list from Sunday's video. And I looked at the list from this video. And it's like, it's 90% the same shit. It's the same stuff. And, people ask, about all these stocks and I get there's plenty out there. And I'm not going to tell someone how to trade or what to trade, but there's easy plays out there right now, and it's very clear to see where the action is. So when I looked at the stocks that are in play this week compared to last week, there's a lot of the same stuff. Obviously, I'll rip through some of the stocks that you want to be watching for the commodity plays, for the Ukraine plays. I'm going to continue to watch coal, BTU. It's breaking out. It's continuing to be relatively strong. It can be difficult as a day trader some days, but you just had the EU pass the ban on Russian coal. Vale, if you want to go for miners, you got Vale, you got Rio. Maybe these guys start picking up with some of those Russian miner bans or sanctions and so on. These guys have been strong. Or you can go for just like gold players as well. GDX, the gold miners ETF, sitting there looking like it wants to break out. Cybersecurity, I don't see why this sector would die quite yet. Regardless, I still like this CrowdStrike. I'm watching it if it can get back up to the 200-day, or you could do like Palo Alto, whatever companies strikes your fancy there. The food play started picking back up. DBA starting getting back up to highs. Wheat picking back up here. These guys, they're slower movers. You could look at something like corn if you want, or something like that. But there's the food plays continuing to elevate in commodity prices. You could maybe find some food stocks equivalent somewhere in there. Uranium continues to sit back out and break out. This one, some of these are, some days some of them are on, some days the other ones are on. So it's kind of like a check, consistently checking through them. Hell, even Lockheed Martin picked back up all of a sudden. So the defensive plays and the defensive stocks in there. EQT, looking at the liquid natural gas players in the U.S. EQT is still exploding higher. LNG it looks like it's poised to break out. I think this is the largest liquid natural gas provider in the U.S. These kind of commodity plays still super hot, still the stocks that I'm going to be watching very closely this week. Obviously, we can also watch a lot of the defensive plays to see if they continue strength or not. They're getting really hot, so I'm hoping we get a little bit of a pullback in the defensive commodity plays, or at least just a pause. So like XLU and XLP, they're getting hot on the RSI and price action. So I'm hoping, as a mean reversionist in heart, that we see a little bit of a period of chill this week, but who knows? Some of the other stocks, Walmart, I think Michael S. has mentioned this every day. It's one of the hottest stocks out there in terms of just action and volume and just overall price action. Now it is getting pretty hot up here, getting a little high. It's strung together an impressive amount of green days. It looks like Apple during the short squeeze. So maybe we get a little bit of pause up here, a pullback, whatever. Who knows? China plays. I'm very publicly opinion that China plays are crap, and I'm expecting them to come off and continue to come off with the headlines there. You could play healthcare. Healthcare, I don't know what the hell's going on in healthcare. but Jesus, I mean, XLV exploded this week, and this one's still relatively early in its breakout. Stocks like AbbVie, stocks like United Health, although United Health reports earnings this week, you got a lot of, hell, even Pfizer. I think, Desires mentioned a lot of healthcare stocks this week. Pfizer and those guys, they've been really strong. There's good opportunity in that sector as well. There's others as well. UNP I'm going to watch for bounce, or maybe just continuation on the breakdown, these transportation plays. Obviously, Twitter's doing its thing with Elon. I might look to see if that can kind of continue to come off. Volume has steadily declined since the peak here. So I might look for the gap fill on Twitter. DWAC is still just looks like crap, though it's gotten kind of cold on the RSI. I'm still expecting this one to continue to drop. Starbucks looks abysmal on the chart. This one's probably going to continue to fall apart. Verizon was a stud last week, got up into its 200-day. I'll probably continue to watch that one for some plays. The Kroger Costco guys, I mean, with the headlines that they were getting, Costco and Kroger both getting upgrades, price target increases. Costco had a slew of good headlines, some rumors out there as well. Those stocks have been very in play. And then also a couple other spec plays that I'll be watching. I'm still watching this BWV. This is the one that I mentioned on Friday in terms of it dropped 90%, I think, on Thursday. No headline ever came out. The only thing I ever saw was that their lockup period expired. So you probably did have some insider selling, which is bad sign. But again, 90% drop like that. Mean reversion is by heart. I can't help but to wait to see if we get a turnaround on something like that. It's kind of like the inverse of this stock. And this one's going to still haunts me in my dreams, where I talked about wanting to fade this play and I just completely forgot about it. It's like the inverse of that. There's no real headlines out there. I think this thing has some bounce in it potentially, but price action is going to be the only thing that pays me there. Other stocks I'll be watching, EDU just did its reverse split. Bullshit China education company. They said they were forcing them to go nonprofit anyway. I see no reason why this thing won't just go back down. They only did a reverse split to stay in compliance here because, I mean, they were a penny stock just recently, so they had to do it for their price. So I'm expecting this one to fade back off in the long term. I'm kind of curious about this TCAT price action. This is the NFT play. I don't know why it was picking up, but it's kind of curling up here. I like that the volume kind of picked up back up on Friday, so this is kind of a bit of a spec play. I need volume to show up, so I'm not holding my breath on that one. Some other stocks that ran this, I didn't even see this. Some FIO pharmaceutical went from 90 cents to 235. This is a pretty nice chart, and I'll play this in either direction, frankly. BCYC, another one that had some crazy movements yesterday on Friday on some headlines. I'll see if we get some follow through. And then this SST I expect to continue to fade off. I'll try to keep looking for shares to locate and short and see what I can do there. But there's plenty of day trades here and there that keep popping up, so we're going to continue to get opportunity there. But other than that, it's going to be the same shit for me. It's going to be healthcare. It's going to be, I'm sure Mike will be watching semiconductors. They got shellacked last week. The commodity plays. I'll continue to watch the defensive plays. I might even watch Berkshire because that picked back up with the defensive plays. So it's going to be the same stuff. And then also as we get to the tail end of the week, we'll see earnings start to pick back up. So that's really what I'm looking at this week. It's been very good some days for short-term trading. Definitely not if you're trading the market, because it's been kind of nasty for the last couple of days of the week there. But I think that could change this week if we do get a breakout, if we do get a trend in either direction. But there's plenty of opportunity out there, and definitely a lot that we need to be juggling as traders. So yeah, that's going to be it for the week.